Welcome to the B.F. Anderson Technical Report for September 29th. Milton Friedman, very famous economist, there's no such thing as a free lunch. Well, with Wall Street, there's just not a lot of easy things about it. It's very difficult. This is a book I just recently picked up by Morgan Housel called The Psychology of Money. And it kind of talks about how difficult this whole process really is. He says most public companies are duds. A few do well, a handful become extraordinary winners that account for the majority of the stock market returns. J.P. Morgan Asset Management once published the distribution of returns for the Russell 3000 index, which is a big index, a lot of stocks. And he said since 1980 to 2014, 40% of all the Russell 3000 stock components lost at least 70% of their value and never recovered over this period. So basically what he's saying is that the overall return on the index was made up of about 7% of the companies, which meant that 93% of them were duds. So, you look at this graph here real quick, and you can see since 1980 to 2014, of the technology sector, 57% of them were duds. I mean, catastrophic losses. And even the electric utilities, there was, duds in that group. So the point of all this is you have to kiss a lot of frogs before you meet your prince. So in other words, you've got to be very selective and you've got to look for the right stocks. So let's see how we look today. This is the NASDAQ. We continue in a downtrend. We're below the both moving averages, got actually a death cross. We're looking at 5 indexes, so let's look at all 5. Here's the mid caps, same story, not much to say. New York Composite, same basic story. Here we have the small caps getting hit pretty darn hard and pulling back, to new lows for the year. Here is the S&P 500, again, new lows for the year as of yesterday. Here we have the aggression index continues in a free fall. We got somewhat of an attempt at a rally in the growth stocks, however, pulled back. Got a little bit of a bounce today, but nothing to write home about. Here are our economic indicators. Interest rates continue to be climbing. A little bit of a pullback today. Oil prices continue to be in a downtrend. Bank stocks, the financials, continue to be in a downtrend. New lows have really gotten out of hand here. We over the last, say, 3 to 4 days, we've seen new lows. Actually, 3 days ago, we hit a new high for the year, 1,100 new lows on the New York Stock Exchange. That's not a good indication. Now, I do think it's important to realize here that I am of the opinion, and we are of the opinion, that the market's going to have a difficult time staging a rally unless interest rates quit rising. So what we're looking at here is a bond fund called the iShares High Yield Corporate Bond Fund, and I would be of the opinion that until this particular bond fund can turn up and give some sort of an uptrend, the market's going to have a difficult time. So we'll keep an eye on the junk bond market. The symbol is HYG. If we can get a rally, something like this, that could be an improvement. Also, I'm keeping an eye on the credit card companies. Here's MasterCard as an example. You can see here MasterCard stock is in a very severe downtrend. I would keep an eye on both MasterCard, Visa, American Express. Here is the volatility index. Now realize here this is a 5-day moving average on the index, and the VIX actually got up, around 30. It's over 30 now, which, is saying that, be careful here. A real big up move in the VIX, though, could be somewhat of a positive. Here's the yield curve, continues to be in a downtrend, and so forth. So let's see here. We have the trend strength continues 0 on the S&P 500. Trend strength is 0 on the NASDAQ. Continues to look negative. Now here are the top 5. We've got First Solar continuing to kind of hold in there. First Solar actually holding in there, pretty quite well. Here is Pinduoduo, which is a Chinese retailer, in a downtrend, trying to pop a little bit. But I'm just saying that in this market, even if these stocks are in a downtrend, if they're in a less of a downtrend, they make our list. Here's Karuna Therapeutics, downtrend. I'd just keep an eye on it. Here's Acrotherapeutics. We had a major gap up in this stock, consolidating and somewhat breaking out. I think they have some breakthrough drugs. Here's Enphase. Enphase is, again, another solar play. We got somewhat of a breakdown and is trying to rebuild a little bit here. So all in all, market continues to be in a downtrend. Continue to be cautious. Let me know if you have any questions. Thank you very much.